Let me go ahead and all right, cool beans, y'all. So I'm gonna go ahead and get started. Picking up from Wednesday and looking back to Monday. In the beginning of the week, I told you guys that go back to the dollar. Okay. Told you guys that I did want to see the dollar come up and retest 95.69, this level here. However, I did say that there was a good chance that the dollar could come back down and retest in its zone. As we can see, the dollar gave us a bullish push. Hold on, let me get to the beginning of the week. All right, here we go. Dollar started out bullish, beginning of the week. Got to like Wednesday, gave us this bearish drop. There was a lot of bearish sentiment for the dollar. Like Wednesday. Yeah, let me see. Yeah, Wednesday. Yeah, halfway through the week. So we started out the first half of the week bullish for the dollar, like I expected. Then we got this bearish drop here right off of a level. And then we got the continuation throughout yesterday and today. And as we can see, price pushed up above our levels, came back, retested it perfectly, then came back, gave you another retest here, and price still appears to be bullish. So I would expect for the dollar to be running up to this price level to start next week. And that's what we'll be looking for to start next week off. So with that being said, keeping it moving, we can move right on to Euro USD. Euro USD, of course, in the beginning of the week, I wanted to see us get a reaction off of this level here. We did get somewhat of a minor reaction off of it. Um, Good 20 something pips. We know that this trade should have been a break even trade, or you should have took profit when you was up 15, 20 pips or whatnot. Price came back down, slammed through our zone. So of course we know that when we see a move like that, we're gonna start looking to reposition ourselves on the right side of the market. We can clearly see that the market is bullish right here. We wasn't expecting the market to run. We can clearly see that the market is bearish right here. We wanted to see the market run bullish right here, but being that we see this bearish push through our structure in our zone of with that, we're going to start looking to reposition ourselves on the right side of the market, because it's obvious that the market is not bullish. It's obvious that the market is bearish. So looking for scalp setups when you see a move like that, y'all know how it go. You can pull out your fibs, start working with your fibs. Don't get a re-entry there. This low. This high. Yep. This high. Okay, cause yeah, broke that low. So this would have been a great re-entry for Euro USD today before the market closed. 70 to 80% of this pullback which would have got you a good little drop before the market closed. 30 pips ain't bad. I didn't trade. I didn't touch U30 this week. I mean, not U30, but Euro USD. Like I told y'all before, I rarely trade currency pairs. But starting out off the week, since we do expect the dollar to start out the week bullish when the market opens back up Sunday, then we will be expecting Euro USD to keep selling. We could see this little pullback come back up in here, pull back, and then a continuation to the downside. So moving on to GBPUSD, we see we started the week out bullish. We wanted to get a reaction off of this zone, and this zone did. Market slammed back through it, all the way back through both zones, then came back up. Couldn't get back above this structure here. All this structure here that we was looking to play off of. See price couldn't get back above it, break above it, and start buying to the upside. So that was a clear indication that price is still bearish. And when you see price break back below these zones like that, these price levels, then that's a clear indication that you need to start looking to reposition yourself for the sell to the downside. So starting out the week next week, we will be looking for GBPUSD to continue to the downside. Moving on to NZDUSD. Wanted to see NZDUSD be bullish off of this zone. As you can see, price just slammed right through that zone. That would have definitely been a stop. You would have got stopped out on that trade if you'd have took that trade. However, when you see that, you wait for the retest. Boom, you get the retest. You get the second retest. Boom, you take the trade. You be in a little profit right now. And I do expect NZDUSD to keep selling off on into its week. Looking at Bitcoin. Bitcoin gave us our trade. If you took this trade, this was good money. 3,300 pips. 3,300 pips. That one trade right there. It don't matter if you lost Euro USD, GBP USD, and NZD USD all put together. This one trade right here would have put you back in profit. It would have canceled out all those losses and put you back in profit, way in profit. That's why trading the way I trade is very successful, because my risk to reward ratio is nothing less than 1 to 3. That way, if you take 10 trades a day, you can lose 7 trades and only win 3 and still be profitable for the day. So yeah. So got that trade set up. That was dope. I do expect Bitcoin to give us another play to the upside off of this zone too. So we'll probably see Bitcoin continue to rise throughout the weekend, and this is a 24/7 traded um, currency. All cryptocurrencies are traded 24/7. So even though the forex market is closed, stock market is closed, you can still trade Bitcoin right now as we speak. It's 24/7. It never closes down. So Moving on to silver. Silver still ain't gave me my play yet. I think I took my I had this marked up when I went over it. I think I deleted it, but I don't think it didn't give me my setup, so it don't even matter. It didn't come down into my zone. Um Silver did, I mean not silver, but gold did. Gold gave us our sell off the top zone. It gave us this buy. This is the buy I told y'all about uh Monday on the Zoom call Monday. Wanted to buy off this structure. Got that buy. That was good pippage. To be exact, 1,400 pips, 1,100 pips, almost 1,200 pips. And then if you got in on the downside on the retest, could have rolled it down 2,100 pips. Could have caught it when it came back up, rolled it back down again. Could have just ping ponged this zone. You already know, as long as it don't get back above this high, price is still bearish. So get the retest, sell, another retest, sell. Price can't break above this high. Tells you that price gonna come back down to this level and then decide whether it's gonna break these highs or whether it's gonna continue to go low. It's just all about price action. So starting out the week next week, expecting the dollar to continue to be bullish. So we may continue to see um, gold sell off. As a matter of fact, let me see. I like the way this structure here looking around about 1865. So I think that was a level that I had marked previously, but I deleted it when I deleted everything off of all my charts. So yeah, I do expect gold to eventually come back down to 1865. Whether that happens Sunday, Monday, Tuesday, Wednesday, I don't know when it does, but when it's going to happen. But I do have it coming down here. Definitely by the end of the year. Uh, Probably by the end of the month, to tell the truth. So we'll just be keeping our eye once we see this level broken back below again and see price can't get back above this level, these two levels here, then we'll position ourselves to ride gold down to 1865. And then moving on to my favorite pair right now, U30. Well, it ain't even a pair, it's just an indice. So looking at U30, I told you guys Monday that I did want to see U30 come up and give us a sell off of this zone. We did get that sell. As you can see, we got that sell to come all the way down here. Told you guys now I did want to see I did want to see U30 bounce off of this first level instead of coming all the way down here. However, if you would have took the trade off this level, you would have definitely probably had to get out and then get back in once it broke back up on the retest right here, because this was quite a lot of drawdown, like 2,100 pips of drawdown. So yeah. So but if your account was large enough and you wasn't over leveraged in your account, your stop loss would have been below this low here. So your stop loss wouldn't have got triggered, because this entry here wouldn't even have got triggered. It would have only been this entry here. So your stop loss would have never got hit, and you would have seen some good profits off of that buy, almost 5,000 pips. Um, And then if you would have been watching the market when you seen price get back up here near this zone, this level where you got the first, when you got the first sale, then you see price come up here and give you that big reaction like that. Yeah, this matter of fact, Antonio was here today doing this sale. And so I showed that to him live while he was here. This sale right here. Because we got this push up. If the market was gonna continue to be bullish, it would have just bust through that level. It wouldn't have gave you this reaction like it did. So when I seen that, um, that was a clear indication to go ahead and bring that bad boy out right there. And I did go aggressive. So although I tell y'all that, while I take majority of my trades off of the discounted price, off of the sweet area, as Michael Hudson calls it. I told you guys before that the sweet area it really consists of the 62%, the 70%, and the 79%. I say to be more conservative on my part and more and to be take as less risk as possible. I only take trades off of 70 and the 80% most of the time. But however, um, due to my discretion, um, if it's a situation like this when I know the market is about to close and I know that they're about to push price down before the closing bell. Um, Today I went here when I seen price get right here at that 62. I just went ahead and pressed the button and it just dropped through the floor. Um, when I do that, if I do take it off the 62, if it starts pushing up aggressively, y'all know how U30 do or any currency you trade for that matter. When you press that button, it starts pushing against you real aggressively. You start seeing yourself go into negative soon as you press the button. If I take a trade off the 62 and I see price start to do me like that, I get out immediately and take my loss. But as you can see with this right here, as soon as I press the button, price sold off. So I was able to ride that out. However, if price would have started pushing towards that 70, I would have took my loss and then I would have waited for price to get the 80 right here. Then I would have pressed the button again. And then if it would have still kept pressing against me, I would have got out and then I would have started reevaluating the situation because obviously I'm wrong about what's going on. That makes sense to everybody.
Yep.
Yes, it does.
Okay, cool beans. And so starting out the week next week, when the market open, I'm gonna be paying real close attention to this. As you can see, that's what price closed at. And then if you bring out your fib, you measure that move, you can also see that it's right there on our level. So that's what we looking for. Want to see price. Go ahead and push up here. And then we should definitely see a reaction when price gets to this high right here. it's almost guaranteed that we at least see price sell off for 200-300 pips. Y'all gotta realize, like, it's nothing. Like, just look at this one red candle right here after this last blue up candle. Just this one red candle right here by itself is 461 pips. Just that one candle. This whole down move right here is 3,000 something pips. So like when I be giving y'all these trades, like I was telling Antonio today, when I be giving y'all these trades and I be having the TP1, TP2, TP3 in there, that's because I'm seeing price for the whole week ahead. So I'm telling y'all that price is gonna eventually get there. It may not get there when you take the trade. It might not get there within 2 or 3 hours or that day. It might not get there to Friday. It may not get to TP1 or TP2 until Friday, and then it might not reach TP3 until one day next week. I'm giving you an overview of where price is going overall. But when I take these trades, I don't be in these trades to no dang go TP1, TP2, TP3. Because it's why? Why you gonna hold a trade that long? When you can get in and catch 400 and something pips in one candle and go on about your business and potentially be done for the week. So when y'all take trades, especially with U30, and I give y'all those TPs, or even if I just give you a TP1, don't try to hold that trade until it hit TP1, because more than likely you're going to get stopped out at break even, because price is going to pull back, and most of the time price is going to pull back to where you entered at, just to get you out of the way before price keeps going in the direction that you want it to go in. That's the psychological side of it. So when y'all take these trades, if your weekly goal is 100 pips or 200 pips, and you're in a U30 trade and you've caught 400 pips and you're trying to hold a trade to TP1, that's greed. It ain't no other word for it. I used to do the same thing, used to be the same way, and 99% of traders all are. And that's why 99% of traders are unsuccessful traders. Greed and impatience. So if I give you a trade and you jump in the trade, you take the trade, you see the trade, you like the trade, you go do your own analysis, you agree with the trade, you jump in the trade, and within 10 or 15 to 20 minutes, you've already reached your weekly goal. Please close the trade and take the profit and go on about your business. Don't be greedy and try to hold the trade to TP1, because I can almost guarantee you 9 times out of 10, you're going to get stopped out at break even, or your stop loss is going to get hit. Don't ask me why, that's just how the markets work. That's why our motto is money in the pocket is always better than money on the table. That's why our other motto is once it's blue, it's on you. Once that trade go blue, it's on you. No, you should never have a losing trade on your account that was once blue. Point blank, period. It ain't no other way to put it. You should never have a losing trade on your account that was once blue. Because once it's blue, it's on you. Move your only thing you gotta do is move your stop loss to break even. So what if you get stopped out? You didn't lose no money. See, that's where the psychological side of it come in. A lot of people can't even make sense of that. As simple as that seems right there, most traders most of you still ain't gonna do it when you get off this call tonight. And that's a fact, Jack. That's why it's so hard to be a successful trader, because don't nobody want to stick to the disciplines. And that's with anything in life. Stick to the disciplines, follow the rule, you'll be a successful trader. I promise you. So with all that being said, I'm gonna go ahead and bring this thing to a close. Carmen's in flight class, in flight school, so she's not on tonight. So she'll probably recall her fundamentals overview later, but I will be posting this to YouTube once I end this call. Does anybody have any questions about anything?
No questions.
Cool beans. So as always, I appreciate everybody tuning in. And y'all enjoy the rest of y'all night, the rest of y'all weekend. Let your family, friends, and loved ones know you love them while they still here. And as always, peace and love, everybody.
Peace and love, bro. Good night, y'all.
You know it.
Peace and love. Good night, everybody.
You know it, sis. Love you.
Love you too, bro.